Hello and welcome to Payments Unfiltered. Today I'm joined by André Moeller, Payments Risk and Fraud Professional Lead at Elli. Elli is a part of the Volkswagen Group, which provides energy and charging solutions for individuals and businesses. We'll be talking about strategies for setting up payments the right way, from defining the optimal payment flow, choosing the correct payment methods, influencing business strategy, and always keeping the customer front and center. Let's get into the conversation. Welcome, Andre. To kick us off, I thought maybe the first question is, what are the first steps when setting up payments in a new business?
It's a really good question. If you get the possibility to set up new payments in an environment you're working for, the first important thing is you have to take a look. You have to start from the product side. What does it mean? It means how big is your average basket? What customers are you talking to? And what's your target group in the end of the day? Because it's different if you talk to the different generations. So the older generation is more related to credit card. The younger generation is between credit card, PayPal, and the Gen Z, let's call it so, is more related to TikTok, WeChat, and open banking stuff. So in that case, the important things is you have to cover on your roadmap is what is my product, what I would like to sell, how big is the average basket, and then set up the payments. Because I'm starting my business career in the gaming industry. There you have very low baskets. So the target group is under 20 in average. So most of the people don't have a credit card. They use alternative payment methods like PaySafe or PayPal or something like that. A couple of years ago, I was in charge of the payment at the DIY store. There we have the bigger baskets, like average 300 to 400 euros. So their target group is house owners, DIY guys, and something. And there you are more related to credit card, not so many PayPal or something like that. So it brings everything in mind that you have to see what's the product, what's the target group, and what's the average basket. Based on this, you starting to design your payment.
So it sounds very much like understand your customer. And once you understand your customer and the journey you want them to have, you can define your payment strategy.
Right. Totally right.
I'd love to understand, like, what impact does the average order value have on how you would devise that customer journey?
It's important if you have different products like we have, for example. We providing e-commerce stores for our customer who need to buy an EV charger. There we have the capture way of CIT. It's customer initiated transaction. So in the world of payment, there are two different ways of capturing. One is the CIT, where you have a basket, where you have a volume, and then you ask the payment of the customer, is this customer allowed to check out with this payment? And you get green or red back. On the other hand, we are also dealing with the charging energy for our drivers. And here we are in the capturing mode of MIT, which is merchant initiated transaction. So we get the information that the customer has charged, and then we send the capture to the payment of the customer. And these two different ways define, in the end of the day, the way of working with the customer and how I design my payment. So what does it mean in the end? Because if you're going to MIT way, the volume of the basket you need to capture is very important because of credit card limits, for example. If a customer, for example, goes from Germany to Spain on one day in between of 18 hours, he maybe have 4 to 5 or 6 charging sessions, depends on how fast he is driving. And in that case, you send in between of 24 hours, 5 to 6 captures to the payment of the customer. So on one hand, it could be that the customer on credit card or other payment methods has not so big limit. And on the other hand, the issuing bank can decline your captures because they thinking about it's fraud. Make this sense, what I said.
Yeah, no, that I completely understand. So,
And in
if you're,
way, you don't always in the CIT way, you always have the basket with a product and asking somebody, is this customer allowed? And then you get yes or no. And if you get no, the customer can't check out and can't buy something. In the MIT way, we doing in the charging environment, it's the customer is done with his transaction and we get the information that we now have to capture. And in that way, there are so many ways of period captures we have to cover in not so big the amount. So roughly it's between 35 and 45 euros. But if you send more than one captures in the vacation times, it could be that they mark you as fraud and something like that. So it's very tricky and bunch more risky than CIT capturing.
Mhm. Absolutely, that makes complete sense. So, very much each business is different. It's not one size fits all, and you really need to understand that customer journey and tailor that payments
Totally.
experience to that. Do you think there are any common pitfalls to avoid early on when building out that payments system?
Definitely, yes. As I mentioned before, you have to take a look. What's the product you are selling to the customer? What's the way of capturing you are working with the customer? So in that case, if you're starting from the scratch, you have so many common pitfalls you can prevent if you're thinking about a little bit more. In most of the companies, the product, the verticals define the way of products, and they missing more than one time. I realized this in the past. They are missing us. They are missing the payment risk and fraud. We can help so much out in planning shops, in planning capture ways, in planning payments and risk and fraud ways to talk to the customers. So it's important also that the companies understanding what they are doing, and then you have to talk cross-functional with the different departments. And always payments is a cross-function departments. It's not related to a product or not related only to finance. It's cross-channel department set up, and you have to talk. You have touch points with all the verticals you have. It doesn't count if it's product, finance, accounting, debitor management, or customer care, or whatever.
That's a really nice way of thinking about payments team as being this kind of very cross-functional team that touches across that entire business cycle. Does that mean that you see like payments teams as being consultants or builders or both?
Yes, both. We always, I see my payment team and myself always in a daily business as a consultant, because we have the view to the market. So what's going on the market, like the regulatories, new payments, potentials, potential fraud risks, protecting our systems of fraud, defending our system of fraud, and something like that. And always has an impact to the product, but also for the terms and conditions, but also for the customer care side. If a customer is calling, for example, the customer care and saying, yeah, I get a dunny letter because yeah, you can't capture my money. So there we have to pick up the customer care, why this can be happened, or what's the reason code why the customer why the capture is going failed. So these information need to be included in the customer care side, that the agent on the phone makes a little click and see, oh yeah, we see your credit card limit is overloaded or whatever, or your credit card is expired, or we get a technical fail from PayPal or whatever. So these information he gets from the systems we support in that case. Also, the product needs to know what they can do with the different baskets. What's the different ways of capturing? Finance teams needs consulting from our side, that we get the right numbers back. So how many captures failed, how many captures are settled, that we can build up a report and something like that. And also, it's always back and forth communication. We bring the information from the markets, we bring the information from the regulatories, and let the verticals know what they have to do, what they have to change in the terms and conditions, what they have to change in the invoice mails, and something like that.
Mhm. And it sounds like there's a high level of collaboration required on the back of what you've just shared.
Yes.
Do you think that healthy friction ever becomes unhealthy? Or how do you view that, especially as the payments function scales as the business grows?
Definitely, definitely. If I can make a bet, I would like to say, I need to say roughly more than 50% percentage in the communication get failed by whom is doing what and who is knowing what. And always the colleagues and always in the companies, the different departments forget payments, risk, and fraud. I had an example last week, for example. Last week, a colleague was calling me, and I was totally happy. It was the first time that he called me, and he asked me a bunch of questions of terminals and technical suppliers and something like that. And I was totally happy that he brings this question up before he do something. So we get the possibility to do the consulting, pick him up, let him know, consult him in the right way, and bring him in the best position that he can work forward.
And I think the most obvious touch point on that customer journey that we were talking about earlier, that would require a high level of collaboration between a payments team and a product team, is the checkout.
Right.
So how do you think about the optimum checkout process, especially trying to solve for that customer, as you said earlier?
I can't give a right or wrong answer to the perfect checkout process. So we come back to the beginning of the conversation. It depends on the product you have. First of all, is it a physical product, or is it a digital product? Then which way of capturing do you have? So is it CIT, where the customer has the basket and you ask payments, is it right or wrong? Or is it the MIT way, where the customer is away and we send out the capture? So that's the difference between that. So in both ways, you have different checkout ways. So in the e-commerce world, or in the shop world, you're running through a shop, you pack everything in a basket, and then you come to the checkout, where you need to be checkout fast. Let's call it so. So everything is ready and you need to buy it now. In the other way of MIT or charging business, there you make the onboarding process, or there you have the onboarding process where the customer gives you first all the information you need: name, address, city, zip code, phone number, email address, and something like that. In some ways, he has to submit an email before he can move forward in something. Then he have to choose which tariff I would like to use. Then the payment is he must insert the payment, and then the checkout process is starting. So it's not really a checkout process; it's more a process where you bring the customer in the position that he can charge the car. But in both views, don't overload the customer with payments, right? With payment icons, for example. So in the world of shop e-commerce doing stuff, it is so you have the limited space of a screen of a computer, more and more going to the mobile world. So the screens are getting smaller and smaller. So if you have 20 payments, it's overloaded for the customer. The customer has his basket and he need to check out now. So every second he have to think about it. Oh, what is it? I never read this. I never saw this. What's that? Everything he's bringing back through sounds very negative, but every thinking he don't know brings him to the position that he closed the store. and that you don't want in that case, because he's spending a lot of time to running through a store. He put everything in a basket, and then you lost him of the last meter. That sucks. Yes.
Yeah, certainly sucks.
In the way of charging or other stuff, you only have the screen of on a smartphone, which is also very tricky because you have very limited space and have to show in a very certain matter of time the customer which payment he can use to make his subscription. So in both ways, always as we have as the red line in our communication, the product, the customer, and in one way, the volume of the baskets, or in the other way, doesn't count. In charging, I don't have a basket in that moment, but don't overload the customer with information. Make it as simple as possible.
And you talked about payment methods. So with the mantra of keeping it as simple as possible, how many payment methods are too many payment methods?
The red line, coming back to red line, depends on the product, depends on what you are doing, depends on the customer, and in some ways the country you are working with. If we're talking about Asia, China, then in most cases you need WeChat and Alipay. So you have two. If we're going back to Europe, in most of the ways you have credit card, you have PayPal, you have Amex, which I put into credit cards. So maximum 4 to 5 payments could be, from my point of view, the perfect fit. And that is country, that is cross country mentioned from my side. Also in the US, most of the people are using credit card, but also PayPal, but also Apple Pay, which is related to credit card and something like that. But in most of the cases, you have new stuff coming up, like open banking, account-to-account payment, and something like that. So 4 to 5 maximum in a row is, from my point of view, more than enough. If you have more than 5 payments, it confuses the customer because he has to scroll, and the customer don't need to scroll. He need to check out in which way ever you are talking to him. So 4, 5 payments maximum, from my point of view, doesn't count which product, doesn't count which country, doesn't count CIT or MIT billing.
And how do you choose which ones to use and to show on the checkout? Obviously, you mentioned like the regional consideration. That obviously makes sense. There's no point in having WeChat maybe in the UK because it'd be less used. But how about like different types of payment methods? So how do you like build out that portfolio of payment methods per region?
Chicken and egg principle, I would like to say, but not always. So if we're talking about, for example, WeChat in UK, let's take WeChat and Alipay to France. So you have the big brands like Cartier or Louis Vuitton or something like that. They don't have so many people which are ordering online from Asia, for example, or in the stores coming from Asia. But if they don't have it, WeChat and Alipay, these customers won't buy anything. So sometimes the chicken and egg principle don't work, but in most cases, the coverage is very important. So for example, we had in the past a payment method in Germany, which was called Pay Direct. They now shut it down since last year, to the end of the last year. And they have the big problem of the chicken and egg principle, because the customer is asking where I can use this payment. And the merchant is asking how many people, how many customers do you have? We have potentially as a target group. In the e-commerce world, I say that chicken and egg principle is a good way of seeing something. So how many customers are using this payment? In our world of the charging, we are just a little bit more flexible, because if you're doing online shopping, I see this with my loveliest. She always used. Sometimes she used PayPal. Sometimes she used Klarna. Sometimes she used the credit card. In the way of charging we are doing, you chose as a customer in a very early stage which payment you would like to use. And then you are in a subscription mood. And in the best way, you don't change the payment. So you have one chance to talk to the customer which payment he would like to use. In the e-commerce world, you get always, when the customer is coming to your shop, the possibility to show him some other stuff, to show him some alternatives, like which are coming up now in Germany and Europe, Zero, APE, and something like that. So in that case, I declined the chicken and egg principle, and sometimes you have to be. Is it a first mover? Yeah. Sometimes it could be a good idea to be a first mover as a merchant to support something which is coming up like AP.
And as a merchant, if you are that first mover, what are the benefits there?
In most of the cases, marketing money. No, but if we see Vero from EP, I think that could be a good idea, or that could be a positive income to be a first mover in that case. Why I say this? Because they have the support from the European Commission, they have the support from the European banks to bring something in the market to be a competitor and to be a competitor to the US brands. And I don't say an alternative to PayPal, because it isn't an alternative to PayPal. It's just an alternative to US brands. So we are now in a very political situation that we have a media guy who is president of the United States, and he do the strategy of America first, and that could be negative for us in Europe, especially in the payment sector, because of the US brands doing the US stuff, and we need some competitor in Europe to hold our data in Europe, to hold our customers in Europe, and something like that. And in that case, I'm pretty sure it's not the best decision to be a first mover in that case.
Got it. And as a merchant, makes sense. So as a merchant, I need to think about customer conversion, the coverage for all of my possible customers, my payment journeys, my payment flows, the costs as well. There's a lot of consideration. So how, as a merchant, would you advise them to kind of go on that journey to make sure they're making the right decisions? But also, how do you validate you've made the right decisions as well?
I always use process design in that case to build up an end-to-end process from the customers coming in to the shop, is onboarding in your service, and it ends up with a dunning and debt collection process, and make this process visible. And then in my understanding and in my learning, you see this whole process with the different verticals, and you find solutions where you don't had see some situations in the past, and everything you make visible brings you more and more to build up a very good end-to-end process and cover everything left and right to this process. Like, did we miss something in the onboarding process? Oh yeah, we need risk and fraud here. We need risk and fraud in the lifecycle monitoring, for example. Or did we how we handle if a capture has failed. Okay, we need an automatic process which sends out from the ERP some dunning letters and hand it over then after a third dunning letter, for example, to a debt collection process. So we need there an external partner. We need there an external partner. What can we cover internally, like ERP systems, like CRM systems, and how they communicate in the process and something. And that's my understanding how you can build up the whole process. How you can build up the whole picture and don't miss anything. And also be part of this project can be, what's the right payment? Why I say this, because in the process, you see that you have to ask the product A, hey, what's your basket? What's the capture way you would like to use or you have to use? And in that case, brings you to the dunning service. So for example, we have a dunning service in our, we have a highly automatic dunning process in our charging because of the MIT. But in our shops, we don't need a dunning service because of we are using CIT. If you don't have the money, we don't send you an EV charger. Done.
How much does data contribute to that as well? So you map out your process design, you understand all the flows, you understand what you need to solve for. How do you then bake into data into your process and into your strategy to make sure that you're optimizing all of those decisions and micro decisions that you're having to make?
Oh, data is always important. Data is one of the most important points in this whole setup. Data is important when the customer in our world is charging, and he's doing charging on a one day, as I mentioned before, on a vacation time. He's going from Germany to Spain. It's normal that he will do 5 charging setups in between of 24 hours on the way from Germany over Luxembourg, over France to Spain. So 4 different countries, 5 or 6 different charging sessions. There, the data is important for the risk and fraud prevention. That the risk and fraud prevention say, yeah, it's valid. But then the data is also important if the customer charged on one day in Germany, in UK, in Romania, and in Greece. That's not really legit in that moment. And there the data covering the risk and fraud, and the risk and fraud saying, oh, something is wrong here. Also, data is important. What's the average basket? What's the average charging sessions? So you can use these information also for risk and fraud prevention. So average basket could be, I don't know, 15 euros. So, and then you have in 1 month, you have an average basket of 55 euros. Why? And you take a look into the data. Oh, it was a holiday time. Yeah, it's fine. Okay. But it's November. It's not a holiday time nowhere in Europe. So there we have to take a deeper look, and maybe there is something wrong or something or what else. And in that case, data is the most important thing we can work, because data shows us what's right, what's wrong, and how is the payment fees increasing, how is the transaction increasing, and something like that. And always data is the DNA we need. It's the blood in our veins.
That is music to my ears, especially as I have a maths degree. So it resonates with me. Andre, that's all we have time for today. Maybe one very last question for you to wrap us up with. So if you had to give advice to a merchant who's building out their payment strategy in a new business, what would be your advice?
First of all, looking for the right payment guy, looking for the right payment person who has experience in payments. I'm in the payment industry since 2007, and I saw so many companies who thinking about, oh, payment is easy, we can do this by our own. No. Because all these companies realized after 6 to 12 months, we need somebody who do this for a couple of time, who has experience in this time. We don't have any studies on the university. You can't study our job. It's learning by doing. And you have a couple of guys outside a couple of persons outside in the world who are in the payment risk and fraud industries for a couple of days. We can teach colleagues, we can teach people, but that's the first thing. If a merchant need to do payments or something like that, first of all, looking for the right guys, hire the right guys, hire the right team, set up the right team, thinking about not only payments, thinking about risk and fraud, because you will have fraud, definitely. There's no possibility that you don't have any fraud. You will have fraud. So hire the right team, set up the right team, and then see the process from end to end, and design this process from end to end, and bring all the stakeholders together. You need product, you need finance, you need customer care, and let's handle the payment team, all these cross-function, all these cross-departments, and then you will have the right payment process end to end.
Fantastic. Well, thanks so much for sharing, Andre, and great speaking.
Thank you so much for your time.
That's a wrap for this episode of Payments Unfiltered. Thanks again to Andre for joining us. If you found this conversation valuable, please subscribe to our podcast and share with your network. I'll see you next time.